Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 12th of April. All right, now it's D-Day, right? We've got the US CPI numbers due later today. Now, just having a look at where everything is to start the Asian session. US equity futures up a fraction. Okay, we are starting to see a bit of a risk-on sort of day forming there, but obviously it's early doors. The clocks have just clicked over, so the ranges have just refreshed. But looks like the dollar is just going to drift lower, and Euro, Sterling, Aussie, Kiwi at this point, while the US equity futures go up, should drift a little bit higher. Now, coming into a major release, right? And we're talking obviously the US CPI numbers. They are the main game. And this is what you need to be focusing on. I don't think there's any point, unless there's some dramatic event that comes out, trading ahead of this release, right? US CPI numbers. Now, the range here, 5.1 to 5.9, with the expectation of 5.2. Now, there's so they're the key numbers that you need to be looking at. I was just going to say, like, okay, that's all well and good. You need to know that. But when you come into the market leading up to the event, you need to be able to check out, see what's going on, see where the general market sentiment is, especially around the numbers themselves, right? So if I just bring you over here to sort of one of the sort of news pages. Now, those traders who have got Metastock, this article here, World Stocks Hope for Fed Pause, Dollar Stalls. It's a very good article around all components around this release, right? There's a lot of conjecture whether they will hold, okay, remain on hold for a long period of time. They're factoring in a rate cut as soon as December. There's 71% of the market is factored in a hike coming into in May, just 25 basis points. But you come in and start to see the reasoning, and this is where it's almost like sitting at a trading desk and you're talking to traders, and they're talking about the various aspects that could influence the Fed, right? And we're talking about the situation, the stress testing, SVB, Credit Suisse, all these banks. Okay, there's a tightening of lending. So the whole situation leads to me, I reckon the Fed will leave rates on hold, right? And if we come back over here, just to connect the dots, right, you look at the where the major instruments are. Will the Fed raise rates in May or not? Well, it's really going to come down to the US CPI number. But just having a look at the safe havens, right? Gold, even the cryptos there, Bitcoin, still moving topside. The market is still very nervous around the release. I would expect if this number comes out as expected, we'll see the safe haven trade roll over. But just looking at the screens, and this is why you have your charts, like multiple charts up here. Look at the correlation here between euro and gold. It's very high at the moment, okay? Now, I've purposely left the dollar index, right, the trend lines as they were. Now, you can start to see here where the market is undecided around what's going on with the dollar, okay? Is it going up? Is it going down? They don't know. The CPI number should give us the answer. And what we're ideally looking for is a number that is either low or high. A number that's in the middle of the range or as expectations are, that sucks, right, for us, because we're traders. We need difference. We need something in the market to really shake the market down, right? So when you come back and look at the dollar index, this is how clean your charts should look. And you can start to see, okay, it's mid-range. We need a good number here. And when I say a good number, we need a number outside the range, ideally, to get the ball rolling. Okay, 5.2%, our expected number, but keep an eye on the range. Outside the range is a better trading opportunity. To me, lower numbers wouldn't be a surprise. All the numbers have been weak, okay, and they are, I mean, obviously expecting a big pullback here. The previous number was 6%, and they're expecting 5.2%. So they have factored in all this weak data. So you come back to the charts. All we've got to do is find the best trading opportunity. Now, just looking at the global markets, okay, the equity markets will have a direct impact from the numbers. Okay, strong CPI numbers, equities will come off. Okay, it's as simple as that. And if, once again, on the reverse side, if we get weak US CPI numbers, well, equities will rally. Okay, now this sets us up quite nicely for some of the currencies here as well. Euro just sitting mid-range. Actually, let me just come back over to the currency page, because there's a couple of good setups here, and there's a little bit of a discombobulation between the bottom pairs here. Euro and sterling, you can see almost trading pip for pip. So those two pairs have got some trend lines. You can almost draw a trend line off the top here, down here on sterling. Now, Aussie and Kiwi are both under pressure, okay? And so these two are behaving very closely the same, which is normal, okay? And obviously, euro and sterling usually work together as well. As of 4, they are usually in step, but they aren't at the moment. Just understand, Aussie and Kiwi are under pressure. That tells me a stronger CPI number will give us a bigger push down here on these two pairs because they've already got weakness in them, okay? Now, on the euro, and if you're planning a trade, you're not sure which instrument to go for, euro has the most liquidity, okay? That should be your go-to if you're not sure which pair, and it's got good trend lines as well, okay? A bit more room on the downside, but once again, are we going to, you've got to try and factor in what's happening fundamentally. We've been getting weak US numbers. Do we get that really weak knee-jerk reaction on the inflation numbers below 5.2? If we do, we're going to see these instruments scream to the top side. The dollar Swiss, okay, moving down. Here's the other safe haven, dollar yen. Okay, people parking their cash in dollar yen? Potentially, it's up there. And you can start to see oil still sitting around $80 or $81, starting to take the knock the wind out of the sails of dollar CAD there as well. So that sets us up. All you got to do is wait for the number, okay? And this is the key component, understanding what we're waiting for. You need to see these numbers in real time, obviously, ideally. Outside the range is a good number. Plan the trade, then just come back, find the right instrument. So it's either, to me, this is a dollar trade or equity indice trade, right? Primarily. Okay, if we get some wild numbers, then the safe haven trades may kick into gear. Now, to me, I like to see things that are really neutral. And to me, euro and sterling are pretty much neutral. Aussie and Kiwi, well, they've got a negative tone, okay? If we got exceptionally weak US numbers, well, then these things would go up, but they've already got weakness in them. It may be sort of nullified a bit. Whereas if we get really weak US numbers, euro definitely, and sterling would be the instruments. If euro goes up, dollar Swiss goes down, right? These two are connected at the hip. So keep an eye on that. And they're the best pairs I would say to be trading. Okay, euro, dollar Swiss, sterling, and then you've got Aussie and Kiwi. Once again, they just understand the negative tone they've got. And if I can just get off that mouse, and you come back and you look at the equity indices, definitely a good opportunity here. These are trending very well. Once again, check out the price action here. They're starting to drift sideways, which you would expect coming into a big number. Okay, so why it's drifting sideways? Because the market doesn't know whether to buy or sell. As soon as those numbers come out, they will know. And that's when the market starts to work. Now, if you're not hugely confident, and I think we've gone back into a strong CPI, strong dollar situation. Last week, we're talking, we had weak numbers and it all became a massive treasury yield issue and, the dollar recession, all this sort of stuff. Okay, that's sort of by the wayside at the moment. If you're not sure, you're looking for confirmation, wait for the US CPI number to come out, then check the US equities, and then you'll start to see whether we're going to risk on, risk off profile in play. Okay, you got to wait a little bit to see that, so you're going to miss the initial move, but it'll give you clearer direction, lower risk, but obviously you're taking out a chunk of the move there as well. This is an absolutely critical number. So if you're not used to looking at the numbers, well, this is a good one to sort of practice, even if you're doing a demo account. Just get your platform up, experience the emotions of the release, the countdown as it comes out. It's very important you don't lose your marbles. Plan out the trade, and then just sit back and see how it plays out. All right. Huge opportunity, hopefully. And this is actually just to finish on, I was going to say huge opportunity, but factor in a number coming out as expected, right? This will save a lot of anxiety, performance anxiety, a lot of anxiety around the lost opportunity if it does come out as expected. But this is the game, right? We either get a number stronger than 5.2 or weaker. We've got the range here to factor in a bigger move. But if it comes out as expected, have a deep breath and walk away, right? There may be a trade after the opportunity, but the immediate reaction, you might get a bit of discombobulation on some of the instruments, but that's it. right? So it's something you have to plan for. Otherwise, you can get all bent out of shape and just start trading because you're frustrated, right? This is about remaining calm, disciplined, and controlled. All right, guys, good luck. Big numbers, big opportunity. Let's see how it goes. Cheerio.